Hey everyone, we have a very special episode today. We have our good friend Eric Bird. He is going to be giving us some insight on today's real estate market. And there's a lot to talk about. So we brought in one of our good friends. We want to touch on a few things and we hope you guys are excited. But first, if you have not yet, send a little love to that subscribe button, guys. Hit that notification button so you can be the first. I like the heart, Eric. So you can be the first to know what's going on here in Northern California. So let's jump right into this. Eric, thank you for coming on.
Yeah.
We want to know what's going on with rates. Where are they sitting at and why are they where they're at right now?
Yeah, thank you so much for taking the time to talk today. And yeah, we'll start off by talking about, where current market rates are. Right now, we're seeing mortgage rates nearly at 23-year highs. I mean, they're somewhere depending on the situation from the, low to mid sevens to close and slightly above 8% for certain scenarios. So we believe that we are very close to peak rates, if not there already. Goldman Sachs, for example, came out with a report last week that said that they think mortgage rates may be close to 7% towards the end of the year. So that would be lower than where they are today. So Goldman Sachs is projecting that perhaps we're at peak rates now and rates may be dropping in the near term. How much or when? It's hard to say.
Right around the corner. That's a couple months from now. So definitely
Right.
keep an eye on that. Okay. Sorry to cut you off.
That's okay. So mortgage rates are elevated, but we're hoping that we've already seen peak rates.
And so what are you seeing out there as far as trying, obviously affordability is an issue right now. We've got a lot of first-time home buyers. People are relocating from different states where price points are very different than California.
Yeah.
What are you seeing out there and what can we do to shed some light to people who want to get into home ownership, but rates are really restricting them right now?
Yeah, the most powerful impact right now is through seller credits for closing costs for buyers or seller credits for temporary interest rate buy downs. So these are ways that buyers can, from help from the seller, for example, on a home, get significant reductions in their interest rates for, the first couple of years of their mortgage. And that will directly impact monthly payment and substantially. So seller credits for temporary interest rate buy downs are having the most positive impact for home buyers right now.
Okay. So are you seeing that as a better option than like a permanent buy down?
Definitely.
Yes.
Yeah, because it costs the return on it is so much greater because with temporary interest rate buy downs, all the benefit is moved too early in the life of the loan, as opposed to spreading it out over 30 years. And the cost of permanent rate interest rate reductions is a lot more expensive for essentially the same benefit. So costs more to fix the rate lower for the whole life of the loan. Most people are buying homes today in anticipation of getting into future lower interest rates. It's not a guarantee, but it's a reasonable strategy.
Yeah, so we have done videos on the temporary buy down, but I'm sure maybe watching this right now, like, what the heck is that? So it's a brief summary. Can you just explain what that is?
Yes. For example, there's one type of temporary interest rate buy down referred to as a 2-1 buy down. A home buyer gets 2% off their interest rate in year one and 1% off of their interest rate in year two. And then in years 3 to 30, the interest rate is the standard rate for the loan. It's not an adjustable rate mortgage. It's just a reduced interest rate for the first couple of years. The interest rate is fixed for the remaining term of the loan.
So it goes back to today's, or when they were to get into the loan, it goes into those days rates.
Yes, exactly. The rate is fixed for the whole life of the loan. The seller, through a credit, is paying for a subsidy for the first couple of years.
Okay. On average, are you seeing people requesting dollar amount from the seller as a credit on that type of?
It's in the ballpark of like maybe 2.25% to 2.5%. So if it's an $800,000 price, for example, it would be roughly, maybe $18,000 to $20,000. It's way more powerful than a price reduction of $18,000 or $20,000. If a buyer asks for a price reduction on the home, they're still paying the full interest rate over 30 years. If they get a seller credit for $18,000 or $20,000 and get this temporary interest rate buy down, it substantially improves the buyer's cash flow for the first 2 years. Way more powerful than a price reduction.
So what I love about this is after 2 years, it's going to go back to today's standard rate. And so in 2 years, what's going to happen if rates, we don't have a crystal ball. We don't know where rates are going to be. What happens if they're in 10, 11, 12? We get that fixed rate at today's rate.
Yeah.
Okay, well, what happened if rates go down to 6.5, 5? Well, then you have the ability to refinance out of your loan into the lower rate. And what does this
Correct.
do? It lets you go shopping right now because let's face it, the market is really, really slow. There's a lot less competition than there was a year or 2 years ago, right? And with that, there's a little bit more of price reductions we're seeing. So what are we seeing? Homes are on sale, right? So if we get that price, that discounted house right now, we're not going to get that when rates drop down, because what do you think is going to happen when we see a pullback on rates?
Yeah, when rates drop, demand goes up, which means prices go up. So if people,
Even if they hit like 7% or even like 6.8, I feel like jump in because they're ready to go.
yeah, there's a big pipeline of home buyers that are pre-approved that are kind of standing on the sidelines right now, waiting for mortgage rates to drop. And so if a buyer is in that group and they step back in when a lot of other buyers step back in, that means demand goes up, and that's going to put upward pressure on prices. So if we believe that the supply demand theory, which is real, and that's why home prices are where they're at today, simply because there's an undersupply of homes basically in every market. As demand goes up, when rates go down, more home buyers step into the market. Same supply of homes, more or less. It's just going to push prices up. It's going to make the same home more expensive.
Yeah, for sure. So,
Yeah, and I think when that happens, we're not going to see sellers giving credits like they are now, because they
That's
don't
right.
really need to. And with
Correct.
the lack of buyers out there, we're seeing houses days on the market go, a lot more days on the market. And this is bringing, the sellers want to sell their house and they're willing to discount either the price or give seller credit. But really, I think as a buyer, you're doing better in that situation, right? You have the option to get a house on sale and buy it at a lower interest rate. Right now, if you can't afford it, rent is for people. Not everybody should go out there and buy a home. But if you're market to buy, right now, I feel is a great opportunity in this scenario we're in.
well,
right?
I mean, if you think about it, right? So a couple years ago when rates were still really low, there was lines of buyers at every house. And so we had multiple offers, people giving up loan appraisal contingencies. We have a lot of buyers who felt like they had to buy just any house possible because it's going to go so fast. And people started settling for the house that they bought. Now you actually have time to buy, you have time to look and really find a house that truly is something that you want, and not just settle for something because it's going to go within 2 hours. Now people can have time to think about it, time to really decide and find that home that has pretty much a good amount of checks that meets their criteria, and at the same time be able to negotiate a lower rate with the temporary or permanent buy down versus, when things pull back a little bit, it may go to that same scenario, even though we're not seeing a 4% interest rate, goes down to like 6.8 or 7. You never know. People might just go like, hey, what the heck? I could just refinance later.
Exactly.
Right. So definitely think this is a good opportunity to buy. So it's not like so chaotic like it was a couple years ago.
This is the kind of market condition that buyers have been asking for. Rates aside, they've been wanting to see homes sitting a little bit more, having leverage, having choice. Yes, mortgage rates are high, but to get these conditions that are favorable for buyers to have leverage in negotiating, this is, mortgage rates needed to get to this place for them to have the power to do it. It's really important for people to take advantage of this opportunity. Look at what it takes to buy and afford a home now, and then look at what can be done in the future to make it even more affordable. Because once rates drop substantially, it's going to put a lot more pressure on buyers because there's going to be more of them. And today's buyers will have less choice, less leverage. higher prices, it's just going to be harder. So take advantage of it when it's most favorable to people. We believe that's today, right now.
What, looking back, and we've talked about it on few of our episodes on this channel, we spent a lot of years renting ourselves. But the thing is, we needed to, we had no choice. But as we started getting more in position to buy, it was really, really hard to get into the market because prices were going up so fast, right?
Yeah.
Looking back on the history that we did renting, that's a lot of money that is just we'll never see again. And now the fact that we were able to position ourselves again to get into a home, I mean, we've obviously gained a good amount of equity in our home, right? So I don't know if we could talk a little bit about equity and the benefits of owning a home, and it's kind of like a way to put money into it, right?
Yeah. Yeah. We like to look at it from the framework of equity gained versus equity earned. Equity gained is how much equity you gain by simply owning a home. Equity earned is how much you make by paying down a mortgage. So if we look at an $800,000 house, for example, with a buyer putting a 10% down payment, if that home appreciates at an average of 3% per year, which is conservative, that's lower than the historical average. In 8 years, that $800,000 home will be worth over $1 million. So a home buyer has gained $200,000 in equity over 8 years. If we look at how much they pay down their mortgage, if their mortgage rate is 7.5%, they will pay down their loan $70,000 in 8 years. If their interest rate is 7%, they'll pay it down $75,000. That's 70 or 75K. It's not a huge differential over 8 years. If their interest rate is 6.5%, they'll have paid it down $82,000. So in 8 years, they'll have paid the loan down between $70,000 and $82,000. Yet they will have earned $200,000 in equity just by owning the home. So the key is owning the home. Interest rates matter towards monthly payment. That's where it matters. But in terms of how much you make over time, interest rates don't have much of an effect. Differences in interest rates don't have much of an effect. The key is how can we help our clients find a way to afford a home that they want? And that's where we focus on helping our clients get approved, obviously usher the whole process of buying a home, but advise them on these different tools and things they can use to help make the home most affordable on a monthly basis. That's everything.
I always tell people too, it's like everybody's so caught up in this whole interest rate thing that people forget, one, when you rent, that's 100% interest going to the seller. You don't get any of that stuff back. Your credit cards are probably 28%, but no one really looks at that. So it's like, this is a valued asset that over a long period of time, just get your foot in the door. There's just more possibilities in, like this is going to be your first home. In a couple of years, you could refinance, take money out, buy a bigger house for your dream home. So there's like steps to be able to create like future wealth in real estate. And like I said, just getting in the door is very important that people realize how much equity you get just by living in a house for 8 years.
Hey, Eric. So I know this channel is reaching, from what we've seen with our clients, people from around the country, even the furthest, someone in Guam, and people are watching, and a lot of people don't know if they could afford a home, if they could even, that's not me, I can't afford a home. What do they need to do? Can they reach out to someone like you to get a game plan to see where they sit? What do you recommend for people to do?
Yeah, we absolutely. It's so important to speak with a professional mortgage advisor about getting approved. If you are not in a position to get approved today, get a plan to get approved in the near future. So that is what we do. We help our clients strategize, whether today, tomorrow, or next year. They must speak with a professional.
We're talking to a client yesterday and saying, your timeline's in about a year. Let's get a game plan right now.
Yeah.
Pick some things up so we could be ready when that time comes.
Exactly.
Get a hold of you, Eric.
I'm sorry?
Can people get a hold of you?
Oh, the best way to get a hold of me is to call me directly. My phone number is area code 510-334-8847.
510, Bay Area. Hey, thank you for all
Yeah,
your
thank you
insight,
so
Eric. We
much.
appreciate you so much. This is time 2 with you on the channel. We hope to have you on much, much more. So thank you for your insight.
Yeah, you
You're
guys.
very welcome.
Yeah, thank you, Eric. And thank you guys for tuning in to this episode. We'll definitely try to keep you guys updated with, the market and some of the things that we're seeing out there. But if you're again new to our channel, make sure to give a little love
There it is. Let's go.
to this channel. So you can be updated with things with interest rates, new homes, new communities in Northern California. And we will see you guys on the next video. All right. Bye, guys.